also competent to go into the validity of the search. But at the same time, there is a judgment of the Supreme Court in the case of Spacewood Furnishers, which says that since search warrants and the reasons which are recorded by the sanctioning authority are confidential in nature, they are technically giving it to the assessee or producing it before the tribunal may lead to larger implications. So what they observed was that the reasons cannot be given to the assessee at the time of the search being conducted, and those reasons can only be produced before the court for examination while considering the validity of the search. And they also observed that subsequently at a later stage, the material which is used against the assessee for sanctioning the search, that may be confronted to the assessee. But apparently their reasoning was that the reasons recorded for authorizing the search cannot be given to the assessee. Now the amendment which they are proposing is that to clarify that the reasons which are recorded by the sanctioning authority are not to be produced before any authority and before any tribunal. So the consequence of this, according to us, would be the tribunal will effectively not be able to consider the validity of the search. So it actually nullifies those judgments, including the Supreme Court judgment which said that the tribunal and the CIT appeal can consider the competency. Now the only options available with the assessee now would be to challenge it by way of a writ in case they want to challenge the validity of the search.
And this amendment is from retrospective 1462.
And this amendment is retrospective from 1/4/1962. Now there is another important amendment. Now if you see, there is a section 281 where the assessing officer can attach your property while the assessment is going on. There is no specific provision for provisional attachment of your property while the search is going on. So what they are seeking to do is they are seeking to amend section 132 to provide that the officer who actually conducts the search, either during the course of search or within 60 days from the execution of the last search warrant, he can provisionally attach your property. And to basically the logic, what they are seeking to do is, while the search is going on, the authorized officer will provisionally attach your property, and subsequently when the matter goes to the assessing officer, he can exercise his powers and then attach the property. So effectively the property will get attached till the time the assessment is completed and the demands, the assessments are completed, and the demand, if at all, is whatever is raised or not. Now another important amendment which they are doing is, if you see earlier there was a scheme which was income declaration scheme which had come, wherein you could have declared undisclosed income and undisclosed assets under that scheme. That scheme was operational till 30th of September and it was effective from 1st June 2016. There was a section which was inserted under 197 subsection C of the Finance Act, which provided that in case you do not offer any amount of undisclosed asset or undisclosed income in the income declaration scheme, and subsequently it comes to the notice of the assessing officer, then it will be deemed to be income of the year in which the assessing officer issues the notice. So even if your income, say for pertaining to 15 years earlier, was not offered for tax in the income declaration scheme, and the assessing officer were to notice that amount subsequently, then it was deemed to be income of the year in which the notice was issued. So there was controversy. In fact, we have also raised that apprehension as to the legal validity of that 197C, because it was contrary to all periods of limitations which are prescribed under the Income Tax Act, 6 years or 16 years. So what they have done is they are proposing to omit this section 197C, but as a sequel to this omission, they are seeking to extend the period of assessment in case of search. Presently, once the search takes place, your year of search and 6 assessment years prior to the year of search are reopened. And so for 7 assessment years, the assessments takes place. Now what they are proposing to do is that apart from 6 assessment years, another 4 years prior to 6 assessment years, so total 10 assessment years will get opened, provided that their assessing officer is able to identify certain undisclosed asset pertaining to those 4 years, and the value of the taxable income based on those undisclosed assets is 50 lakhs or more. So your 10 assessment years will get reopened, not 6 years under as per the proposed amendment. So this is what we have mentioned, that the constitutional amendment, constitutional validity of 197C itself was a suspect. So it's a welcome amendment that they have, withdrawn this, they omitted this provision. Only searches. Now the survey today can take place under 133A only at a business premises or where the books of accounts are kept. So what they are seeking to amend 133A to provide that in case of a charitable trust also they can survey the premises. So this probably is in the light of the recent demonetization, because there were a lot of news that these charitable trusts are being misused in order to convert the money and deposit the money into the bank accounts. So because of this 133A not enabling them to survey the premises of the charitable trust, the surveys could not be conducted, though the only remedy was to seek the information. So with this amendment now, they can conduct the survey at the premises where the charitable institutions are running their operations. Now this is these are basically amendments to call for information. There are 2-3 amendments in 133C. Basically these sections give them the power to seek the information from the assessee, from various assessee, even or not, whether or not the proceedings are pending. Now 133(6) power can be exercised only with the prior permission of the principal commissioner or CIT. They are seeking to amend it to provide the joint director, deputy director and assistant director can issue notice under 133(6) without the prior approval. Then in 133C they can seek the information for verification of the information available with them. So they are seeking to centralize the entire process, whereby the notices will go directly from a centralized agency and the information will be called. So to facilitate this, they are amending section 133(6)(c). Now there are few amendments with regard to the limitations.
I think Rohit, we skip this the time limits, etc., and you can come to them in once.
So I'll just quickly refer to that. There are change in the time limits for making the assessments. They have reduced it from 21 months to 18 months and 12 months going forward. So with this we have tabulated, and this will be part of our
regarding question in this, regarding device return, the time limit has now been reduced.
Yes.
Correct.
So what about court mergers? How would they take place? Because normally what was being done, that in a High Court approved merger, the appointed date was either 1 year prior or 1.5 years or 2 years prior. In case now the revised return time lapses, how does
this difficulty was there earlier also, because even merger sometimes takes longer for the scheme to get approved, and by that time even the earlier time limit was over. So what we used to do was we used to provide it into the scheme itself, that there would be enabling after the merger the amalgamated entity would be entitled to revise its income tax returns, and that will be taken cognizance of. But this problem was there even prior to this amendment also. They have only shortened the time limit, nothing else. The practical difficulty is there.
Subsection also talks about that mandates filing of returns for some exempted entities, which covers section 10. One of them is section 1023 AAA, which talks about funds set up for the employees' benefit and their dependents, and most probably superannuation. Then does that mean superannuation is also now mandated to file return? Superannuation fund.
We'll check. We'll check and let you know. These are all one important amendment is regarding this foreign tax credit. So whatever disputed foreign tax credit, supposedly the dispute is settled after a long period of time. In that situation, there was difficulty in getting the credit. So they are seeking to amend section 155 to provide that within 6 months of the dispute being getting settled, you can get it rectified. Then there are certain penalties which are sought to be proposed for the delay in filing the return of income, which again we have tabulated over here. Now they are again moving to there was earlier this the intimation being issued under 143(1) was made mandatory. Again they are saying that basically the purpose of this amendment is that they seek to withdraw the giving of the refunds while the assessments are pending. So that the refunds are not issued while the assessment is pending by way of processing the return. So they are taking away the power to mandatorily process the returns under 143(1). Now in set of losses, this is an important amendment. They have restricted the claim to the quantum of set off. Say for example, under the house property you have a loss, and that loss is now capped at 2 lakhs rupees. So earlier any loss under the head house property you could have set off against your other income, business incomes or other incomes. So now that is being capped at 2 lakhs of rupees. Is a total cap. Total cap under the head capital gains. Now another amendment in section 79 is basically to include the startups. So they are providing that in case there is no change in the shareholding pattern of the startups, then in that situation section 7, by virtue of section 79, the losses which you suffered earlier, that benefit will not be withdrawn. Now tax deduction and collection, there are some amendments. Now in rent, in case of any rent which is paid in excess of 50,000 per month, now that will be subjected to TDS. Now it's not very clear, but probably in this situation even individuals and every assessee will be required to deduct TDS, whether or not he is into the business or not.
Residential,
Both. No, it is only to make it easier for the deductor, that you are not supposed to deduct it on a month-to-month basis.
No, you see,
No, only two.
you are assuming that the recipient was paying,
Paying
tax.
tax.
This is just to track that the recipient is actually paying tax on the rental income. So once it comes in your 26 years, they will get the trail of the payment and will be able to check whether the correct.
There are on the aggregate up to the 50 up to the total rent which is payable in that particular month. So for example 50,000 you have paid, you are paying a monthly basis, but the deduction will take place in the last month, but it will be capped to the extent of amount which is payable in the last month.
No, see, 6 lakhs on 50,000.
So 50,000 you will be deducting.
On 50,000 if you do, the total is 6 lakhs rental, 5% is 30,000. So
But-
you will deduct 30,000 out of 50,000, the last month's rent.
So 20 up to the it is capped up to the last month rent. It cannot exceed the last month rents. So there are some procedural amendment in section 206C and all.
We can leave that out.
We can, due to paucity of time, we are leaving it out. The recipient? No,
So
then he
PAN
will
number
be
2 is the highest rate.
then he will be subjected to a higher rate.
Higher rate is applicable.
Yes, higher rate is applicable, but still in that situation you will apply 20%, but the deduction cannot exceed the total rent payable in the last month.
Okay.
Now some of the miscellaneous provisions, I'll just quickly wrap up. One of this was an ongoing controversy in case of an immovable property which is held as stock in trade, whether the deemed rental value is to be considered or not. Now there was a judgment of the Delhi High Court wherein they said that the deemed let out value has to be considered for the purpose of taxation under the head income from house property. Now they are seeking to amend the law to say that it will be treated as nil till for a period of 1 year in which the completion certificate has been received, till the period of 1 year from the end of financial year in which the completion certificate is received. Now carbon credits again was subject matter of substantive litigation, whether or not amount received on transfer of carbon credits what is subjected to tax or not. There are various judgments which have said that it is a capital receipt, it is not in the nature of income. Now they are seeking to provide that income from transfer of carbon credits will be subjected to concessional rate of tax at 10%.
But what happens, will you bring this into your book profit for MAT purposes, in which case you will get taxed at 20%?
Now book profit again will be dependent upon whether it is routed through the profit and loss account
so-
or it is directly credited to the reserve.
Right. So that option may still be available.
No, set off, we'll have to check. There is
Okay.
no bar.
What has been prescribed is a rate of tax of 10%. There is no change or amendment in the income definition. So it is still possible to argue that it is a capital receipt not liable to tax. Only rate has been prescribed. That does not ipso facto mean that by virtue of prescription of rate it becomes taxable. So it is not that income definition has been amended to bring this transfer of carbon credit into ambit of taxation. Only the rate has been prescribed. So
But
according
why would you want to set off against a lower rate? Because your income, this income is taxed at 10%. Your loss may be subjected to a higher rate. So why would you want to set off? But technically you will have to set off. Probably that's why they have not brought in any amendment prohibiting the set off. If you see the capital gains also, the reverse is not allowed. The income which is subjected to tax at a lower rate cannot set off your loss which is subject to tax at a higher rate. So it is a reverse situation actually. Now another important amendment is this restrictions on cash transaction, which is an important amendment. Now presently there were various provisions restricting the cash transactions. For example, you were required to collect TCS under section 206C on certain sales. Now what they have provided is they are seeking to introduce two new sections, 269T and 271DA. What this section provides is 269T, 269ST provides that any transaction above 3 lakhs, you cannot pay the cash. Now what is important over here is this third thing. In respect, so for example, you cannot pay to a person in a single day 3 lakh, more than 3 lakhs rupees. Second is in respect of a single transaction. So for a single transaction, even if you are paying in more than 1 day, you cannot pay more than 3 lakhs in cash. Now third is very important. It says in respect of transactions relating to one event or occasion from a person. So for example, a marriage, you pay to the event manager. For a particular occasions, you may be paying various kinds of payment for mandap, to be paid to the restaurants and etc. So the total aggregate cash payment which you can make for a particular event is capped at 3 lakhs rupees. You cannot pay more than 3 lakhs. So the third limb is very important. It says in respect of transactions relating to one event or occasion from a person, you cannot pay more than 3 lakhs of rupees. No, I cannot pay more than 3 lakhs of rupees in cash. If I pay more than 3 lakhs of rupees in cash, I will be receiving. So it is basically on the recipient, right? Correct. No, but the recipient will not take it then. Recipient, why will he take it? In respect of transactions relating to one event.
No, you may split the payment, no?
You
may
would have
split the payment and the aggregate payment may be over 3 lakhs. You may split the payment.
So for example, reimbursement, you could have claimed that it is reimbursement. What I paid to the event manager was actually he was reimbursing to someone else. It was not the payment which he is receiving. Now what they have said is, for example, for this hall, you may be paying it to the event manager. For some celebrity, you may be paying to this event manager. Now event manager cannot take more than 3 lakhs of rupees for various occasions in an event, for various events in an event.
See, I think Vipin, the point is, you can't pay more than 3 lakhs in a day. Now if you split the payment in 2 days, you are technically circumventing this provision. Payment for one single event or one single occasion, you are giving in 2 days. So it is to cover, the third limb is to cover that situation. Same, receiving of payment
But
is
the
the same
recipient
thing.
will not take it.
Yes, right.
But he will not
No, he
receive
will
it.
not be able to receive. And no, not to, in order that you are not able to split the payment.
For an event, you may be paying various kinds of payments.
You may make on 2 different days.
You can say there are various transactions involved in an event. So therefore, every transaction has to be considered as 3 lakhs. So they say that you have to consider as an event. All payments relating to an event, the capping is 3 lakhs of rupees.
Rohit? Hello?
Sorry? It will not make any difference.
I think
It is
basically,
to a person.
I think the
Rohit,
idea.
suppose somebody is paying rent, house rent on a monthly basis. For the entire year it crosses 3 lakhs. Will that be considered to be one event or not?
No. The tenancy is from month to month. That will be separate. ये last का खत्म करो.
Now, for this, in case there is a violation, then there is an amount, to the extent of violation, there is an equivalent penalty which is prescribed in section 271 DA. Then there is a penalty which is now sought to be imposed of rupees 10,000 for every violation on the hands of the chartered accountant or the merchant banker if there is a certificate which he gives is found to be incorrect. And the authorities of advance rulings are sought to be merged for various direct and indirect taxes.
I think, friends, this Mr. Anil Agarwal, I think you missed, Mr. Agarwal, you missed the last one. For professionals, before you rise from here, there is a penalty of 10,000 if you are not diligent in discharging your duty. So before people go.
Friends, with this we have come to the end of our presentation. Thank you very much for being such a patient audience, and I'll be failing in my duty if I don't recognize the efforts which my friends had put, who are sitting at the back, in compiling this paper and putting this presentation together. So a big round of applause to all my friends who are there at the back. And kindly join us for cocktails at Allure. So just down the LA is the hall for the cocktails. Thank you very much.